But we start off with the markets lower today as we are in the thick of retail earnings, and there's been one key theme amid these reports. Tariff anticipation. Everyone from Macy's to Walmart, Home Depot, and Target citing the trade war as a future headwind for the space. Treasury Secretary Steven Mnuchin saying he spoke to the Walmart CFO and is monitoring the situation closely. With the retail ETF down more than 7% this month alone, is there more pain to come for the group? Tim.
Well, the retail community or the consumer is supposed to be pretty healthy right now on the basis of where you see jobless claims. By the way, jobless claims have been weakening. So there are some people that are already starting to say, hey, you know what, we're at peak labor and this is a dynamic. You talk about the XRT. So the XRT is down about 8% in 20 sessions and basically is given back halfway to where it was on December 24th when we would all acknowledge the world was in a pretty scary place. So, I think we're in a dynamic here where a lot of retailers are looking at the net cost to them on imports. They're looking at a consumer that's retrenching. But more importantly, there are some secular issues in the sector, I think, for department stores, as we've learned that. And even some of the, how should we call it, the consumer discretionary names that I don't think are as in control of their destiny as they once were. So those were issues that were plaguing retail for the last 2 years. And I think they're coming back to light in a global growth slowdown.
Yeah, we definitely had highlights and lowlights so far from retail earnings season.
Yes. I mean, we've definitely had some of each. We've had some self-inflicted wounds, right? And then we've had some really great performance. I think, obviously today, Target, very good job. I was very impressed with Target. And they seem to be doing all the right things. They seem to be able to withstand the potential Amazon threat. They're really doing a good job on so many fronts and making the transition to have their digital business be very important, growing nicely. On the flip side, Lowe's today, I view much, but not all of Lowe's, as very much self-inflicted wounds. When you look at their business and why should it be materially different than Home Depot, it shouldn't. We've known that for a while. That's how why they had new management. They've been working on it, but they seem to have shot themselves in the foot. And so Lowe's now had gotten close to a Home Depot valuation, and then Home Depot just still is the premier name in the industry. Home Depot is now more expensive, but I think the execution risk of Lowe's is much greater. I would much rather be in Home Depot than Lowe's at this price, even though Home Depot is a little bit more expensive. We'll see. We'll see how Lulu does. I mean, they've been a constant performer through any market. But if you look at things that have furniture exposure, like if you look at a Restoration Hardware, Macy's cited it. I also think even if you're a retailer and you think you have the China trade situation manageable, why come out and put out an aggressive number? Yeah. Right? Why do it? It's free to kind of, tamper down expectations.
Is it more that, though? Is it more that? Because you guys, it took to like the last sentence to start talking about the trade woes that we're seeing in the retail sector. I have to throw that phone. It's flashing. So, but is it more of secular? Or is it really trade? Because you would think that they have this trade issues. This is not the first time we're hearing about it.
So you're trying to figure out if it's something to look through or if there's a real problem on a macro level.
I think if it's more of what the two of you had said, then there's a real problem with retail that we're seeing. But I think they should already be confronted with whatever trade tariffs that we're seeing. They could see more coming on, but they should have workarounds. And I like the fact that Mnuchin is talking to Walmart. It makes me think more positively about Walmart.
I don't think you can have I'm sorry to interrupt. I don't think you have workarounds like that, right?
No.
We've had uncertainty for a while. It's very difficult to change what has been your sourcing structure for a very long time. And I know like Capri, which has traded terribly, which I own, has tried to do that, and I think they've been somewhat successful in doing that, but it's very hard to do.
But the stock doesn't wait. That doesn't have to wait. As long as there is some sort of a workaround, it's not an instant fix, but the stock price will move higher in advance.
So the whole market has been anticipating that that trade tariffs are something we work through and we look through, and there's going to be a challenge to it. What I think is starting to happen in the market, and retail is probably the canary in the coal mine, is the market starting to say, wait a second, maybe this is going to last longer than we expected. Maybe just even an incremental improvement on the talks isn't going to be enough. This is starting to impact our actual business. Now, in terms of retail, they're getting hit on both ends, right? So we have the secular change in how products are sold, this digital revolution coming in, and then at the same time, you have a tariff hitting them. So for retailers, as Karen pointed out, it's all about execution. If your management team is not executing, on point in this environment, you just get crushed.
I just think it's impossible to not think about all of this. And I think we're all dancing around macro. This, to me, is all about macro. And even though we want to point at some of the secular, I mentioned the secular issues, or bottom up in the form of management teams that aren't executing, you have to look at commodity prices that are falling. Look at bond yields around the world that are basically, bonds are back near essentially would have been, 3-year low, actually all-time lows, excuse me. If you look at copper's down almost 20% in the last 25 days. Oil broke down today. So, one of the conversations yesterday was, how it seems like the market's kind of done nothing, but there's a lot of stuff below the surface that looks pretty nasty. To me, retail is the place you're going to be suffering if you're starting to see some deterioration in the leading index. And the consumer, which is ultimately the backstop for this economy in this country, it's 70% of the economy, is certainly has no reason to go out there and be spending at will right now.
Consumer confidence, though, and sentiment is at all-time historic highs. So I look at that commodity complex coming in as deflationary. So I look at that as almost a tailwind for a lot of these consumer names and retail names. So for me, I think that the back half of the year, we set up with deflation in lumber prices with Home Depot. We set up with trade worries. I think the back half of the year is going to be much more positive for a lot of these retailers.
I agree. I think the consumer's in good shape. I think that, look, we have interest rates down, so I think I've been surprised we haven't seen more of a home buying bubble or more activity. Let's not call it a bubble, but home buying activity and all of the spending that goes on after that at a Home Depot, maybe less at a Lowe's apparently. But I think the consumer's still in good shape. Employed, wages are going up.
So then what's going on? So in terms of retailers that can withstand some of these both macro issues as well as tariff issues.
The ones that have already done well, Walmart and Target, those two. And Target's probably a little bit better position than Walmart in that they have some more moves that they can make. Walmart's kind of already made this digital transformation. But look at the ones that have already performed. Somebody like a Walmart actually might do pretty well if oil actually goes lower, which I happen to think it's going to. That is that so-called tax cut for the consumer probably impacts the Walmart customer a lot more than anybody else.
I'm glad that the Treasury Secretary is on the phone with the Walmart CFO. I also would like him to be on the phone with maybe a Macy's CFO, also the CFO of something like a Wayfair. I mean, just to get sort of a broad. You would think that of all the retailers, Walmart would be the best equipped to deal with tariffs, to find a workaround solution, to squeeze their suppliers.
Maybe he's
to
trying to use them.
Some of the costs.
Maybe he's trying to use them. Yeah.
I guess why Macy's? In other words, to find out where department stores are factoring in, how to find different suppliers and different trade routes.
So it's not just the largest retailer.
But see, I mean, hasn't this been the criticism of the administration, at least by much of the business community, which is you haven't given us time? And I realize, by the way, the China dynamic has been going on for 15 months now, so that maybe that's flimsy. But I think in the case of really stepping it up and getting to this place in this impasse, where now, I mean, obviously, Huawei has been, okay, maybe the headlines tell you that we're going to have another delay, and that was yesterday's rally. But the reality is, I don't think that a lot of companies have any sense the administration is giving them the heads up that they need. So, I mean, that phone call may be well placed, but what are they going to say? I don't know that they're going to be able to have a dialogue.
Well, that's what I'm saying. I mean, I think that they're going to say, hey, we're handling it pretty well because we can.
That Walmart's going to say that?
Yeah.
I wonder if the dynamic is something else.
On the phone, something else. On the phone with Wall Street, a different dynamic?
No, I mean that the calls ingoing to the Trump administration from the CEOs are going to be really sort of, hey, you have to do something to fix this situation. Not, how are we managing it? More pressure on the Trump administration.
Which is ultimately the bullish case for stocks. Maybe not right here, right? But if you get a sell-off in the stock market and CEOs are calling up the White House saying, hey, you got to stop, you got to do something about this, that's actually the time you want to buy this market. It's going to look ugly. We'll probably have an after-hour special about markets in turmoil. Those are the days to buy.
Don't ridicule markets in turmoil.
No, I love those.
They're in turmoil. They are really in turmoil.
No, I understand, but I like those days.
Let me ask you one last question here. If you were to put together a basket of China leveraged stocks that will go higher, have that sort of outsized move to the upside, if there is a trade deal, should retail be in there?
Has to be in there. I think retail is using that as a major headwind. So retail has to be in there. And then it's all the China related names. You got to go. You want to go retail and you want to go China, you go Alibaba.